The following is a presentation of TFNN. Live at TFNN, the Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, the Money Masters.
Day, Money Masters and Treasure Hunters. Welcome to the July 7th magical Monday edition of the Money Masters Show. Maybe we ought to call this the Magical Mystery Tour. What a great album that was, folks. You have that one in your collection out there. I think that was a Grammy. I'm sure it was a Grammy Award-winning album back in the 60s, 67, 68 out there. You know, if you own that album, it's one of the, it's a album. It's in mono or fake stereo, as they used to call it. Boy, have things changed. Have things changed since then out there. In any event, it is July 7th, the Magical Monday edition of the Money Master Show. I'm your host, Steve Rhodes, author of Mastering Probability, the daily newsletter service that is the intelligence for creating financial freedom. Hope everyone is off to a great start this morning. Let's make sure that we do all that we can do to have an extraordinary day. Now, my outcome here during the next hour is to help you to become a better money master and to provide you with tools that empower human potential. Because living up to our potential, folks, that's something you and we must master each and every day. So let's begin our day with empowering beliefs, the words of wisdom brought to us by our extraordinary producer, Al. He makes everything here that we do at TFNN seem so seamless, and I know that it is not. But Al, he starts his day this way, and so should you. He says, hey, watch your thoughts, for they become words. And then watch your words, for they become actions. Watch your actions, for they become your habits. And watch those habits, for they'll become your character. And watch that character, for it becomes your destiny. It is Magical Monday. This is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show right now. We've got the Dow trading off 55 points. She's trading at 17,013, holding that $17,000 mark. S&P off about 6 points at 1979 and change. NASDAQ down 13, trading out at 44.72. Russell 2000 week links out here down 10 points, trading out 11.97. The NDX 100 off about 3. New York Stock Exchange down 55. Goldilocks back $5.90 right now. Silver off 20 pennies. Light sweet crude off 63 cents. Our call number is 877-927-6648. Would love to hear from you. Let me just see what's going on overseas out here. The DAX is down 53 points, 0.5%. The FTSE off 32 points, 0.5% out here as well. So nothing really changed much from earlier this morning. Lead the charge, the upside right now in the marketplace. You've got Priceline. Priceline up $13 and change out here, up 1%. It's trading out at $12.56 and change. Pharmacyclics back in the mix out here. PCYC up $3 and change. Regeneron Pharmaceuticals up $3. Jazz Pharmaceuticals up $2. BioDelivery Sciences up $1.80. Perrigo Company up $1.75. Infosys up $1.74. To the downside, Granger GWW off 2.5%, down $6.58. Wynn Resorts. Let's go take a look at the casino operator out there. WYNN is its ticker symbol, off $5. Netflix off $2. Tesla down 3. Amazon off 2. Tidewater Inc. off $2.50. That's off 4%. Zillow down about $2 out here. Down 10% this morning. GT Advanced Technologies, GTAT is the ticker symbol. So we'll go take a look at that. Some of those stocks here in a moment. Let's go see what's going on inside the ETF structures out here. Let's go take a look at start off by taking a look at, let's see here, looking in the S&P 500 sectors. Let's look at the energy sector. The XLE off 47 cents this morning. Let's go see what it is doing out here. It's trading really just kind of a narrow-banded trading range. Now, the XLE, the energy sector, is going to be interesting to watch this because this had volume off of the highs. That trading session, if we take a look at, first, what has the XLE done here? We take a look at the energy sector, which, as you know, is weighted primarily with ExxonMobil, CVS, Chevron, not CVS, the drugstore. Chevron, CVX is the ticker symbol. Schlumberger, those three equities represent a substantial portion of the energy sector. We do take a look at the XLE itself. It's got an A to B equals C to the upside that it completed. It looks like it really pretty much completed the 1 to 1.272. It did it with a nice little wide range. Well, it completed it on the trading session of June 23rd. That's with a little doji candle out there. But then that very next trading session, volume off of the highs. Never a good sign. That's institutions selling. That's not enough yous and me's that are selling out there. That says that significant resistance inside the XLE exists at that high of that doji, which is 101.52. If price gets above that, that'll just tell you just how bullish not only the energy sector is. Of course, I think it's the fifth weighting inside of the S&P 500, but really just how bullish the market is. Right now, the energy sector, the XLE, we know we've got volume off the highs. It has not been able to break its market profile low. That would take it down to 98.04. Would need to close below that. It still is, even though you've got volume off the highs out here, it still looks relatively bullish at the moment. So that says we ought to go see what's going on inside ExxonMobil. Let's do that. Let's take a look at XOM is the ticker symbol. Let's take a look at CVX as well. Let's take a look at SLB, Schlumberger. Let's look at those three. Of course, is it going to be substantially different than what we're looking at inside the XLE? I don't know. There's a number of, but let's take a look at ExxonMobil, the number one weighting structure inside this. Now, this is interesting. It formed a new market profile 3 days ago, and that 102.16 is the actual resistance. It's closing above that. That's more bullish than it is bearish. When the XLE had volume off the highs, what's interesting here is that ExxonMobil didn't really participate. You see, ExxonMobil, which is the number one weighting structure inside the energy sector, on the trading session here of June 20th, had a little bit of a breakout, 17 million shares to the upside. At trading session where we saw the pullback inside the XLE, June 24th, 9 million shares. So it had 17 on the way up. Price came back to the breakout area. In essence, it did it with lighter volume out here. And so it's not ExxonMobil that is right now really taking things to the downside inside of the energy sector. Right now, you've got price trading, in fact, inside that June 24th level, but that's not the swing point. It looks to me like ExxonMobil, the message it's providing to us right now is it wants to go test that June 23rd area, somewhere around 104.61 to 103.88. If it tests it with more than 8.5 million shares, it could be setting up its next A to B equals CD to the upside. You say, where would that take it? That would take it to here. Let's go take a look at that pattern. The 8 point right now on a shorter term basis, we're on a daily chart. The June 3rd low is your A point. Your B point is that high that took place on June 23rd. And the C point, as we know it right now, is retracement into June 30th. 1-to-1 takes you up to about the 105.54 range. That is on ExxonMobil. Let's go take a look at Chevron. Let's go see what Chevron is doing. CVX is the ticker symbol off 72 cents this morning, down about 0.5%. Chevron here is dealing with its market profile low. Its support level has not taken it out. As long as it doesn't take it out, that remains bullish to neutral at this stage. 129.74 is that number of its market profile. It's been tested a couple of different times. Last time down here, we saw volume on June 27th of 8.6 million shares out there. That was after moving higher and up at highs with 11 million shares. So actually, the pullback here inside of Chevron is not too shabby either. So long as it holds 129.74, that bodes well for the energy sector. Let's go ahead and finish this off by taking a look at Schlumberger. SLB is the ticker symbol. That here had moved higher with wide price spread, accelerated volume. Did that on the trading session of June 25th out there. Went ahead and has made a higher high. I had some nice follow-through on the next trading session, meaning June 26th. So far, the pullbacks here have been on light volume. It set up a new market profile on Thursday, I should say, out here. That's at 115.17. The top of that wide price spread day on June 25th is at 114.44. I would expect that area at this stage here inside of Schlumberger to hold. Now, let's put this on a weekly time frame. Again, it's the energy sector, in essence, that we're dissecting here this morning by taking a look at three of the top holdings that represent the XLE. On the weekly chart out here, yeah, nice move on the weekly basis back on June 23rd. So that's got volume up at the highs. That's pretty nice. Let's see here. What has Schlumberger been doing? What has it been doing? I don't know if that's so much a consolidation. Yeah, it is actually a consolidation. Yeah. So if you take a look at its consolidation move, its measured move, you'd have to say you'd use the highs of about $95 down to a low of about 54. So that's a 40-point move on top of 95, takes you to 135. So right now it's trading at 116.90. It has a measured move up into the 135 range. In the extreme overbought condition on the weekly chart, but nonetheless that is extremely bullish looking chart. SLB was the ticker symbol that we were looking at over the long haul. Looks like it wants a much higher price out there. Let's go take a look at the ETF structure of the indices out here. Let's go look at the Qs out here. Qs right now, they are trading out at 95.67. Up above is really the next stop for the Qs. That's the 1.618 expansion of its set of swing points. We use our Fibonacci expansion ruler to help us identify where price is likely to travel to. The expansion of the set of swing points we're looking at is March the 7th. The high out there at price level of 91.36 down to the 83.28-ish range out here. That took place on April the 15th. Your expansion of that, we're already above the 1.272 floor. That was 93.56. Next floor on the way up is $96.35. Looks like that's where the Qs would like to travel to. Let's take a look at the IWM. The IWM struggling this morning off 0.7% down 80 cents. Of course, we know the IWM is struggling just simply because of its not being able to break its consolidation pattern. But if it does, that will send a very strong message to the markets. What do I mean? We take a look at the consolidation pattern, which it has been in for quite some time. This is the IWM. That consolidation pattern really takes us back into the time frame of about November in 2013. That's at the lows, and that says that our consolidation right around 107 and change out there. The top of the consolidation is a swing point that took place with volume on March the 4th. Volume of 112 million shares. The price level 120.58. The Russell 2000 tested that swing point, tested the top of that consolidation. It did it on the trading session of July 1st. However, it did it with what? With light volume out there. Was not able to bust it up. So now the pullback today, what's it really doing out here? Well, look, the IWM on that trading session had good volume on July 1st. The volume there was 65 million shares. That was breaking away from a trading session that had 34 million shares. The problem was it was going into that trading session that had 112 million shares out there. So right now, all the price is really done inside the IWM has come back to the breakout area. It is Magnificent Monday. It is the Monday after July 4th. It is hard to believe we're going to have much in the way of volume to the downside. So actually a pullback today on the light volume is more bullish than it is bearish out here. So far, the volume inside the IWM, most of it out during the first hour of trading out here, is pullback with 7 million shares. Remember, it made a high with 65 million shares not too long ago, 4 trading sessions ago on July 1st. 877-927-6648. We'll be right back, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Right now, we've got inside the markets, the Dow's off about 42 points. It's trading out at 17,025. S&P off 4.5. Russell 2000 down 8. Had a request to go take a look at IBB. Let's do that after we take a look at the SPYs and the diamonds out here. So let's go finish off the ETF structures for you. We'll take a look at the SPY off 36 cents right now. If we take a look at what it is trying to do, it's trying to, it's up above the 1-to-1 A to B equals CD. That price objective was 197. That was attained here on the trading session of July 1st. We've not seen any kind of bearish reversal signal. That then says that, hey, I want to go trade up to the next level. Next floor level is 201.65. That would be your 1-to-1.272 A to B equals CD to the upside until we see a reversal signal. That's what it looks like it wants to do out there. Volume today just kind of moving sideways. Volume today, 14 million shares. You know, looking at Thursday's volume doesn't make a whole lot of sense out here. Last time we saw any kind of volume was back here on July 1st, 90 million shares to the upside. So really a light volume retracement here this morning. Again, more bullish than it is bearish out there. So no problems yet inside of SPY. Of course, we took a look at the energy sector. That was trading down the most. This morning we saw that really didn't look to be too bearish out there, other than it did have volume off the high. So there's a caution flag. It's like if you were just swimming in the ocean, there would be a rip current sign out there, so you'd have a little red flag up, I suppose. There is some rip currents inside of the energy sector, but overall looks still pretty good. Taking a look at the Dow Diamonds taking out the swing point high from June 9th. That had volume of 2.7 million shares, and it did it with 2 million shares on a shortened trading session on Thursday. So that, quite frankly, is pretty bullish out here. The support level, old resistance, should become new support, and that is the market profile 169.42. If it closes back below there, 168.93 becomes the measuring mark where you'd see price likely find support, and then finally 167.22 out here. The Diamonds look like they want to complete an A to B equals CD to the upside right now. That ought to take price to 172.82, so about 17,300 or so inside of the actual index out there right now. 17.2. Right now you got the Diamonds trading out at 169.91. So that's what's going on inside those ETF structures out there. Nothing bearish as we speak at the moment. Now, let's take a look at a quick email, as I said during the break. Asked me if I would be kind enough to take a look at the IBB, that's the NASDAQ Biotech ETF, and the listener didn't indicate whether it was a short-term, intermediate-term, or long-term trade, so I think we need to take a look at all. Let's do this. Let's start with the longer-term time frame and work backwards out here, because I don't know if the person is bullish, bearish, or what have you. But let's start with a monthly chart. Let's get a picture. Let's get the big picture out here. So we take a look at the monthly chart here for the IBB. Little rocket ship coming off of lows back in 2009, March 2009, traded out at about the $58 mark. Right now it's trading at $265, so a nice move off of the lows out here. On a monthly chart, once it came off of those lows, we have not seen a monthly profile low. That's the green horizontal line. We've not seen a close below a market profile low. That includes even with the sell-off that took place back here in April. Even with the sell-off inside of the IBB out there, we did not see a close. We did not see the low violated. In order for that to really reverse its trend on a longer-term time frame, meaning a monthly chart, we would have needed to see a close below 195.89. The essence of price is the body of the candle. The wicks of the candle are nothing more than the extreme emotions during the trading session. Interestingly enough, as the IBB was pulling back, when it closed out the month of April, or it saw its lowest low, price closed right around its point of control, its largest area of congestion. It's a level of where traders are most comfortable in both buying and selling, believe it or not. That's at 231.22. That level here is held as support. So the monthly chart, even on the pullback, was saying, okay, not so fast. No breakdown there. Let's look at the weekly chart. Let's go see. So that's the larger trend. That's what the larger trend, before I switch charts out here. Oh, maybe it's too late. Let me just make sure that it's not too late. I don't know. There we go. What it is also doing is trading inside the swing point out here, the swing point high, which is February 1st. Volume of 27 million shares there. It moved into it with 21 million shares in June. So far in July, we haven't traded enough to know. It says if you see the IBB take out 275.40, says it's getting ready for another leg up. That's on the monthly chart. We get back. We'll go take a look at the weekly. We'll go take a look at the daily or anything else you'd like to. You can just give us a holler, 877-927-6648. We'll be right back, folks.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow's off 45. S&P is down 5. New York Stock Exchange still off 55 points and 994 net declining issues out there. If I take a look at its stock chart here, let me put this over on my screen out here. If we take a look at the New York Stock Exchange, I didn't update it for the oscillator in the summation index, but I know it only takes 4 net declining issues here this morning or at the end of the trading session for the bears to actually take control of the session. Now, as I take a look at, oh, come on, why is this not working right? Oh, well, it's not. If we take a look at, that's weird. If I take a look at the, it's live programming. If we do take a look at the candle session here this morning, what's interesting is it's formed a little bear separating line out here. So in essence, it's a version of a gap down. What I mean by that, it's a gap without seeing a gap in price in essence. If you take a look at the candle session from July 3rd, if you look at the open of that session, the open of that session is at 11,069. Trades up and closes out at the high of the session. Now, because it closed out at 11,105, in essence, for it to open where it did this morning, which is 11,072, so that was in essence right at the bottom of the open on July 3rd. Are you kind of catching that? That's really what created that little bear separating line out there. Now, a gap down would be one of the strongest moves down or strongest bearish patterns out there. A bear separating line would be numero dos, would be the second strongest bearish move out here inside of the New York Stock Exchange. So we'll keep an eye. Now, look, there's not been much in the way of damage that has been done price-wise out here, but if we read the message of the markets right now, the New York Stock Exchange, which is the wider swath of the market, actually has given us a little bit of a bearish signal here this morning. Of course, it's going to need help from its friends, meaning the NASDAQ composite, in order for that to really come to any kind of fruition out here. And right now, the NASDAQ composite has not given us any kind of message like that. But let's go back and take a look at the IBB. Let me go back and take a look at now the weekly chart out here. And if you take a look at the weekly chart, what we'll see is that price here is traveling right now inside that swing point high on the weekly basis, which is February 24th. Now, price moved up into that area. That swing point, by the way, from February 24th, had a volume of 8.4 million shares. As price got in there, as price was moving up in there, June 23rd was 5 million shares, light volume. Last week, 3.5 million shares. Of course, expected light volume with 1 day off and a half a trading session, so light volume. But it still is. The IBB is trading inside that low, which is 260.97. What's interesting here from a weekly standpoint, last week it closed above its market profile at 264.96 out there, very close to that, 264.29 actually, 264.98 is where it's trading at out there. So that's bullish out here. In order for the IBB to, it looks like the IBB, by the way, wants to go on a weekly basis, saying it wants to go test the high, which is 275.40 out there. And if it can take that out, if it can close above 275.40, especially if it does with more than 8.4 million shares out there, it'll set up a new A to B equals CD pattern to the upside, and that's what's going on inside the IBB on a weekly basis. Let's take a look at the daily charts out here. Now, that would be very bullish for the markets as well. But if we take a look at the daily charts, interestingly enough, the daily charts show that off of the bottom here, if you take a look at when the IBB, April 15th, was its low out here, no reversal session, no reversal session here to speak of candle-wise. What price did eventually do, though, was closed above its resistance level of its market profile, and it did that on the trading sessions of April 21st and April 22nd out there. And then the green line, the green horizontal line, the unfair low of its market profile has never been pierced on the way up out here. So on the daily charts, that also is bullish. Volume, though, nothing, no great shakes out there. If this does fall out of bed again, it does have volume out at the lows on that April 15th level that has really, well, to say it hasn't been tested would be a false statement, and I don't make false statements around here. At least I try not to. And the reason why I say that is because it has volume on April 15th. The low has not been tested, but the high of that bar was. 6.4 million shares on that trading session, and price had pulled back and tested it with 3.4 million shares, a trading session of April 28th, before it then went ahead and took off to the upside out here. So it looks like the highs want to be tested on the daily chart. We're not seeing anything bearish on the weekly chart, nothing bearish on the monthly chart, nothing bearish out here, and I don't know if the viewer, listener was short, long, looking to get short or long. Wait until you see how the highs get tested here. This may just be in a trading range, and that is on the biotech sector inside of the NASDAQ. And if we take a look at some stocks here that are moving this morning, to the upside, we had quite a few. We had pharmacyclics, we had bio delivery sciences, we've got... where did it go? Well, there were a few others that were out here earlier. Regeneron Pharmaceuticals, there that is. REGN is the ticker symbol. Let's go see what it's doing. It's up $3 and change here. So let's pull this back. Looked like it was trying to form an A to B equals CD, a downside, but it never took out the B point. So that pattern never came to fruition. The B point was April 28th. Volume was 1.2 million shares. It was tested with 1.6 million shares, but never broke the B point. What does that say? It says, potentially consolidation pattern, but let's go ahead and get rid of the A to B equals CD pattern. Let's look at what Regeneron Pharmaceuticals is doing as we speak right now, which is trading into the swing point, its most recent swing point, June the 9th. That has volume of 744,000 shares out there. It's coming into that swing point with volume. I say that because if we take a look at the last day that had any real volume before the holiday really began was July 2nd, and it moved up with 1.3 million shares. Today, 244,000 shares moving into 744. Not too shabby with an hour and 10 minutes into the trading session. If we can take out those highs, let's pull this back a little further. Let's go see where there's a supply line. Here it is, inside of Regeneron Pharmaceuticals. Now, it's trading inside the low of that. The low in the trading session we're looking at is March 7th. March 7th, Regeneron Pharmaceuticals has big volume off of the highs. Not necessarily a good thing out here. That says that it's really important for Regeneron to be able to get above 343.50 and do it with volume. Otherwise, that becomes your real resistance area. This is a supply line, and some folks may be saying, hey, I'd like to get my money back out of Regeneron Pharmaceuticals. I will assume here, because of that volume off of the highs, because it was also not able to bust down the lows, chances are it runs out of steam somewhere around. Could be as high, could test the high at 350.57, could test the low of that swing from March 5th at 344.10, but likely runs out of steam there, and you start to see a consolidation, a sideways move, a pretty decent one, because you're going from 350 down to about the 270 area out there. That is on Regeneron Pharmaceuticals. REGN is the ticker symbol. Let's look at Pharmacyclics, PCYC as the ticker symbol. Let's go see what this is doing. This thing had been just a real high flyer out here, coming off of, well, it's the let's put up the weekly chart. Probably has a better view of just how this thing was flying. Take a look at that. There's a high-flying, highfalutin stock out here back in 2011, down around $5 or so, trading out right now at $96, but made a high back here the week of February 17th out at 154.89 out here. Now, on the weekly chart primarily is held the unfair, not a great pattern here because this one has not always held the unfair lows out here, but however, it has continued to move higher. So let's just look at this thing from a swing point perspective, a volume perspective out here. Let's take a look at where volume last to the upside took place inside of Pharmacyclics. That's back here, the trading session of January 6th, week ended. There's 9.9 million shares as it moves higher. Now, the problem is that you're trading below that high right now. In fact, that has acted as a resistance line. Take a look at a high volume bar. If we draw a line across the chart out here, I'm going to use that high volume bar. That's at 102.87. And you can see how price and the volume out there, again, was 9 million shares. Once price got below there, that's acted as a resistance zone. Now, the market profile resistance says 100.85, but instead, let's use the volume of that swing point, or that trading session, I should say, of the trading session of January 6th. So, a little supply line out here. It's suggesting that people inside Pharmacyclics are trying to just get their cash back out there because they're uncertain that it wants to move to higher price. Nonetheless, on a weekly chart, here's a swing point from the trading session of December 16th that had 8 million shares, and to the downside, it has busted through with 9 million shares. So it's finally broken a swing point to the downside with volume on a weekly chart. And that says that the change in trend is taking place inside of Pharmacyclics after that huge move up. Now, the key here is, can it take out the low from the weekend at April the 7th? 9 million shares down at that low on the weekly chart, and the low you're looking at is 83.85. If it takes that out, let's pull this back. Let's see where we find our next high volume bar out here. And that's a dangerous thing. That takes you all the way back into the trading session for the weekend of November 5th, 2012. That's in like the $59-ish range. So if you're inside this equity, I'm not saying to close it out. But what I am saying is please make sure that you have a stop in place, and you do not want to see it close below, on a weekly basis, the trading session from April 7th. And the low is 83.85, especially if it does with more than 9 million shares, because that is sending a huge message that Pharmacyclics wants substantially lower price out there. That was PCYC. Let's take a look at what's going on inside Wynn Resorts out here. It looks like all their money today is on red on its roulette table. It's down $4 off about 2% this morning. But as we take a look at it, well, that's a weekly chart. Let's look at the daily chart out here. We can go back to a weekly chart. But let's take a look at Wynn Resorts. The pullback this morning, not too bad out here. Wynn Resorts is trading above its resistance zone. We can see a little bit of a consolidation out here. The consolidation really between the May 2nd high right around 222 and the lows of the consolidation being about the lows of June 10th out here at about the 193-ish type area. So pulling back this morning. It's neither overbought nor oversold. It's above a market profile high from out here on the trading session of 203.32. So that alone sends a bullish message out here. But we are seeing this thing now start to create a trend to the downside. If we take a look at that trend line, we'd start here from the highs of March the 7th. And if we draw that trend line to the downside, it tried to break that trend a couple trading sessions ago, and right now today, so when you break a trend, so this is trying to break a trend, a downward trend that this thing had. Now we're using the tops of the candle session. That's the high of March 7th. That's at 249.25. I'm then using as the next touch point, looks like the high of May 30th, out at 220 even Steven out there. So you can see that trend. And 2 trading sessions ago, it broke that trend. That was on July the 2nd. Volume, no big shake out there. No big deal out there. A little doji on Friday's session, Thursday's session, I should say, and pulling back right now and testing the trend. If it can hold that, then it offers the promise of moving to at least test, I would have to say, test the level between May 2nd's low and high, which is 213 to 222.33 out here. So you can see Wynn Resorts trying to break its trend line out here. If it closes back below the trend line, price likely travels down into the swing point low. Well, I'd have to say probably the area that really starts to hold as a support level is probably the low of that trading session from May 19th, right around 198.52. That is on Wynn Resorts. WYNN is the ticker symbol. Let's see what else is moving out here. Let's take a look at percentage-wise to the downside. Tidewater Inc., TDW, is the ticker symbol. That's the largest percentage move to the downside that I see out here, off 5% this morning. And it's got some volume behind its move out here. So let's take a look at Tidewater. This has had some troubles. It's got a high volume swing point low out here. Looks like that's where it is moving towards. That's the February 5th area. Volume of 3 million shares down there. The high is $50. The low is 45. So it looks like that is where she is headed to. It's gapped down this morning. Volume behind the move so far today is 276,000 shares. So not too bad. I'd have to say not too bad as it's moving in towards that swing point from February 5th out there. It doesn't look like it's going to have the volume to blow that away. Let's put this on a weekly time frame, though. Let's see what Tidewater is doing out here. Give us a feel. So here's a big consolidation inside of Tidewater. The top of the consolidation out here, let's put a line across it. Give me a moment here. That's the trading session from the weekly chart we're looking at, February 28, 2011. So it's made a triple top out here. Last time that it was up at that level was back on February 20th, 2012. Was 3 million shares up there going against 5.2. Not enough to break it out. Then it was up here again back in October 2013. Looks like with just a couple million shares, not enough to bust it out. So now this is likely going to head down to the bottom of the consolidation, which I would have to say is really right around the, let's call it 42.33-ish type mark out there. That is on Tidewater, TDW. Be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open, even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. I have lost my sound here, so I'm just going to go about this, assuming that I'm on the air out there. So, I'm not sure, and if we don't have a connection, then we don't have a connection. Okay, great. So we're back on the air. Don't know what went wrong in my ear, but nonetheless. So we were taking a look at TDW. Really, we gave you it looks like it is in a consolidation pattern out there. It looks like there's a question to take a look at Google. So let's go take a look at that coming from our Tiger's Den. Let's take a look and see what GOOG is doing out here. The question is, volume keeps dropping off and price keeps going up. That is what happens inside a. Let me put the daily chart out. The problem is I don't have a ton of data ever since the stock split out here. Let's take a look at what Google is doing. It's up above its resistance zones of its market profiles. It's trading inside the April 2nd swing point out here. Looks like, when did it do that stock split out here? Maybe maybe it was done right around then. I don't know the date on it. But I can't tell you it's really trading inside that swing point. It says it wants to go test that high up at the level of 604.83 out there. And that is really what's going on inside of Google, best I can tell. Look, with regard to a market that is moving up on volume, got to remember that volume is only one aspect of taking a look at, from a technical standpoint, from taking a look at a stock chart out here. There are many other functions that you can use, many other tools that you can use to help you identify where price is moving to, but volume is not the only consideration out there. You'd have to say that price trumps volume. Where volume really comes into play is when things fall out of bed. Volume helps you to identify where it is that you saw the last large institutional support area, and the question always becomes, is that area going to hold again as support? And we can take a look at stock after stock on a daily basis to help us identify when things really fall out of bed, when price moves down into those support levels out there. So let me go back and take a look at, since this is the last segment out here, let's go back and take a look and see what's going on inside the currency pair. So let's go take a look at the euro Japanese yen. Market is sold off just a tad out here during that break. That was off 66 points. Again, the 120-minute session here for the euro Japanese yen, that is coming to a close here as we come into 11 o'clock, so less than 3 minutes from now. That hammer candle still holding. That low out here is 138.47. It's been tested. It's been rejected. If you do see a close below that, you should see the euro Japanese yen move down to about 138.17, and that will suggest lower price inside of the markets. It is a Monday after July 4th. The volume thus far has been light on the retracement. There's another place where you can use a volume. The retracement here thus far without any volume yet behind the move. That would suggest that you're just seeing a little retracement in the market as we speak right now. We did take a look at the New York Stock Exchange. The New York Stock Exchange was showing a bearish pattern. That was showing, that is a key marketplace. That is showing a bear separating line. That is a bearish signal out here. We have not seen a bearish reversal candle inside of the New York Stock Exchange really ever since the trading session, this little evening star pattern back here on May 13th. That led to a couple days to the downside. The VIX index right now, the VIX index, in order to really get bearish in the market, needs to close above 1206. It's 50-day exponential moving average. We are not seeing that as we speak right now. The VIX is up $1 right now, so you get a little bit of volatility in the market. It's up 9.79%. Folks, if it trades up by more than 10% today, you can expect tomorrow or Wednesday to see a bounce inside of the market. So, folks, stay tuned. Our man Basil Chapman is up next. Have a magical Monday, and I look forward to seeing you tomorrow morning. Take care, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.